Good morning, ladies and gentlemen. Welcome. My name is Marta Chlewicka. I am the spokesperson for LPP. This is our second debut on the stock exchange because the last time, well, as far as we know, the last time the management board was on the stock exchange was 10 years ago. The results, financial results for the second quarter of 2015 will be given by the Vice President, Mr. Przemysław Lutkiewicz, and I'll give the floor to Mr. Vice President. Thank you so much. Before we move on to the results, I would like to say that I'm very happy to be here in the on the stock exchange. This is my first time in this building, and I remember how I was starting my career, professional career, and I was working for 20 years in this PBK bank in the old building of the stock exchange. And of course, as a volunteer, as a trainee, I didn't really have much work to do. So every day I was actually visiting the stock exchange, seeing the floor, trading floor, and observing the brokers. And it was very exciting for me. And of course, I haven't become a stockbroker, but I still think that this is a very interesting place, and it's really nice for me to be here again. Ladies and gentlemen, we will discuss financial results covering the second quarter of 2015, and we will tell you what was happening in the second quarter, and then we will move on to our plans for the rest of 2015 and a little bit about 2016. Well, let's start with some numbers. At the end of the first half of a year, we had almost 1,594 stores in 16 countries. So the sale in the comparable stores grew by 0.5%, whereby the LFL was 0.5%, and the space grew by 16%, and gross profit margin was 53% for the first half of the year, and we have to say that it was lower than the expected one. We have two factors here. On the one hand, this is the strong US dollar, and on the other hand, we have this spring-summer collection. It was quite a large collection, and we had to do some sales. Well, that's behind us, and it seems that we are entering a better time. Cost was really good. We were working hard. It was minus 15%. It was SGA per square meter. Therefore, our EBIT was 160 million zloty. The most important, most significant events. Well, further expansion to the Middle East, new stores in Qatar and Kuwait. Now we are in 3 countries in Middle East. We continue our expansion in Germany. In the second quarter, we opened a new store in Wuppertal. So by yesterday, we had 7 stores, but as of today, we have 8 stores because we have the Leipzig store. So the expansion continues. We are also developing in Poland, and we have this prestigious location in Poznań. And we still remember about our online sale. In June 2015, we opened online store in Czech Republic. And now a little bit about our stores, and this is the map. We have 2 new countries, Kuwait and Qatar. By the end of the year, we will add also the Saudi Arabia. But in terms of Europe, as you can see, this white space, this white field is Belarus, and I have to tell you that next year it will be colored. This field will be colored because we are planning to open our stores in Belarus, but I will come back to that idea later on. And now let's move to the financial results. The most important factor, which is like for like sale. So LFLs grew by 1.5% in the second quarter after 4 quarters of continuous drops. Especially, we can see here the growth in May and June. These are the 2 months that contributed to the positive picture of the whole period. In terms of our brands, all brands experience positive LFLs. This is a good news in terms of countries, except Estonia and Poland. All other countries had positive LFLs. And now let's move on to the space, floor space. Where did we grow? Well, we have growth 30,000 square meters, whereby Poland was over 20,000 square meters. In addition to Poland, we have also the EU, Germany, as I've mentioned, but also Romania. We opened 8 stores in Romania, but this country is treated as a new solution. We have really good trading conditions, new management board in our company, and really good perspectives as compared to all other markets that we are present on. Those conditions are really good. So Middle East, as I said, 2,000 square meters, and Russia and Ukraine, we didn't open any new stores in the second quarter, but I'd like to say that we are very happy with the results that we've achieved in Russia and Ukraine, particularly Russia. Well, the past year was quite a difficult year. It was a tough year, so we were really preparing for a tough year 2015. Therefore, we decreased the operational cost, the cost of the headquarters in Russia, and hence we have record-setting low cost, while the profits are quite good. So the profits are the best as in 5 years. It's really hard to say what will happen next in the future, but it seems that Russia will be a positive contributor in terms of our financial results. Now let's move on to brand distribution. Reserved the biggest growth of floor space, but also Cropp and House, they also experience really good big growth in terms of floor space. In Cropp and House, we have the seasonal stores. So we open tents. These are mobile stores. This is the seaside and Mazury regions. 20 stores of House and 20 Cropp stores. They operate from June to September, and they really support our summer sale. We need to mention SiNSAY, which is the youngest brand, which is 49% in floor space growth year on year. Total sale. So what was it in the second quarter? It grew by 9% year on year. So the highest growth was in European Union. Here in the graph, you can see the distribution of sales according to individual brands. And now let's move on to another important factor. So this is sales per square meter. Here you can also see not only the retail but also wholesale. So on the right, you can see the retail sale. It dropped by nearly 7% year on year. The highest drops are in Russia and Ukraine, whereby we had the depreciation of the currencies when we calculated according to our Polish currency. So in the European Union, the drops were the lowest. In the European Union, Czech Republic, Slovakia, Lithuania, and Hungary, the growth were positives. So the growth in floor space, in sales per square meter were positive. And e-commerce, online stores, growth by 24%, whereby we also have sales in our Czech store. And in the third quarter, we open we will open a store in Slovakia, and in the fourth quarter we will open an online store in Hungary. However, by 2016 we want to have our online stores in all EU countries. Now let's move on to the margin. And here we have a little bit shakiness in the seasonality. So the second quarter was also always better than the first quarter, worse than the first quarter. And this time it's different because the margin in the second quarter dropped. It was 52%, and comparing to the record-setting level, which was 61% last year, we can see like 9% drop. But looking into the future, looking ahead, in the next half year, in the next 6 months, the margins should be better. First of all, the new collections have more models, and the number of pieces, they are adjusted to a lower demand, and we are not expecting that the second half of the year can bring us like higher sales, and therefore the drop of gross profit margin will be lower. Now, cost. Let's start with our own stores. They were really small, drop by 16% year on year. And now the elements, please note this green channel at the end. So this is the rental cost. And this is yet another month and quarter where we can see that they are dropping. We have new contracts, rental contracts, contracts with the shopping centers. Another element, we have the HR cost. And here we were trying to adjust the number of employees in the stores to the current levels of sales. And another element was this variable factor in the wages. So the wages of our employees in the stores part of their wages depend on the sale in the stores. So this is this variable factor. And the other costs, which is the provisions, which commissions, amortization, and so on, they also dropped year on year. The total cost, which is the SG&A cost, which is the headquarters in Poland, foreign companies, and the store cost, which is SG&A. They are also very, very low, 16% drop year on year. And please, let's see the graph on the left, on the right. So this is the sum of the stores, cost of the stores and the headquarters. And when we have 16% growth in the floor space, our cost dropped by 2%. And the cost in the stores are comparable to the previous year, whereby the headquarters are lower. And now let's move to the second quarter financials. Sales grew by 9%. Cost dropped by nearly 2%. And this is a great news, the fact that the cost and the dynamic of the cost is negative as compared to the growth of the sales growth. But you may say, well, the gross profit margin, the margin, well, yes, the margin is not as good as we wanted it to be. So the operational EBIT is lower than last year due to the margin. And again, we have low. At the bottom, we have some financial positions. So these are the positive effects. We have FX gains. So the FX gains due to ruble and hryvnia situation were very positive, 27 million zloty. Now let's move on to the first 6 months, the total situation. Growth of sale 8%, margin -4%, SG&A cost which is a little bit of growth, 2%, and EBIT 160 million zloty. Below we can see the negative FX, so this is FX losses. However, the first quarter was so negative that the positive second quarter wasn't able to fix that. And then the net profit nearly 150 million zloty. I know that you are observing the cash flow very closely, but let's start with inventories. The inventories increased by 21% in terms of value, but we also have a higher floor space, so we check this inventory per square meter. So we have this optimum level here. So you remember that I always say that our referential factor for all brands, it's 1,500 per meter. And we want to stick to it, but we have to remember that the US dollar is more expensive. If not the growth in terms of US dollar, well, the inventories per square meter would be around 1,300 zlotys. So that 1,500 per square meter that we have now, it's quite good for us. And we've opened new logistic center last quarter. It was operating under some supervision, and we have been sending already the commodities to our stores and agents, and we want this logistics center to start as of the September to operate independently without any technical supervision. And now the working capital. So this is our working capital. We have a little bit longer cash cycle. It was less than 100 days last year, and now it's 103 days because the inventories were growing slower than the liabilities. And we have this cycle, 103 days. And this is the result of the fact that we produce more and more in Bangladesh, so we can't really extend payment terms there because it's either the lower price or longer payment deadline. In China, the situation is a little bit different, but we are moving from China to Bangladesh, and therefore the change in this factor. Now let's move to the capex and our debt. The capex amounted to 125 million zloty. It was less than last year, but last year we were constructing our logistic center. So therefore, in 2014, we had a special capex dedicated to the logistics center. In terms of the debt, net debt, it's 0.8, and it's really safe situation, and we plan to lower this factor and then to pay our credits, our loans. And cash flow in general, we have generated cash flow, particularly due to the changes in working capital. And on the right, in the graph, you can see the seasonality of the second quarter. You can see this second quarter of 2014 and the second quarter of this year, where the revenues from the operations are similar. Less investment, less capex, and hence we were able to pay off part of our liabilities in terms of our bank facilities. And the balance sheet continues to be strong, stable. Well, we have non-current assets growth. We have more inventories, because we actually deliver commodities to the stores, and more liabilities. I would like to pay your attention to the financial liabilities. There is the amount for dividend that will be paid out in September, but at the end of the second quarter, this is the liability of the company. And now the decisions, the resolutions passed by the company. Well, first of all, the dividend, 32 zloty per share, and the dividend will be paid in September. And another important element is the merger with Gotels, with the seat in Cyprus. And this is our subordinate company, and they own the rights to our trademarks. And in the fourth quarter, we will complete our merger. It will be a cross-border merger. Therefore, the assets will be in Poland. And that's all about financial results. And now we will talk about the situation in our trademarks. So some news from the fashion world, and I would like my colleague to take over from here. Yes. I will tell you shortly our situation in the past 3 months. We are still consequent in making higher awareness of our brands. We invite new faces, well-known people to cooperate with us in the autumn-winter season. Our collection will be advertised by a top Polish model. We will also address a special campaign for SiNSAY customers, and we invited the singer, Margaret, who will prepare her own collection. She will start advertising next month. Own collections, well, they make the regular collections newer, more interesting, and we have big collection, 40 models that was prepared by a model who is aspiring to be a fashion creator, Georgia Jagger, and this collection has been prepared for all our stores across the world. It will come to the stores soon, within the next few weeks. We remember that the stores need to reflect the interests of our customers. Therefore, we decided to introduce a new concept of the Cropp brand. This is really exceptional. It is exceptional for the group. We have a special relaxing zone where the customers can sit, relax, play games, PlayStation. So we have big displays, and the customers will be able to use the tablets free or Wi-Fi free. And so the first store like that it has been opened in Poznań at Półwiejska Street. This is this prestigious location. According to our latest reports, fast fashion in Poland is reaching some stable level, and we have been observing for 2 years the fact that Poles are becoming more open to fashion, and this is with the help of the bloggers, fashion bloggers, TV shows, when people, experts tell Poles how to look good. And each of the lines that we offer, we offer the most trendy models, but we also remember about as wide collection as possible. So we need to be thinking more in terms of trade. We need our customers to accept the collection. And then we also have the basic collection, universal models that sell really good, which they are just universal. Przemysław mentioned Germany, so nothing changes here. The strategy of our company, adopted by the company last year, remains the same. 50% of our locations, well, we search for shopping centers, and then 50% of our efforts is to find good locations at good streets, because this is how the trading looks like in Germany. We've heard last year that the mother of the, well, to succeed in Germany, you need to be cautious. Therefore, we are very cautious in terms when we are searching and choosing our locations, and we want to find satisfying floor space. And sometimes we know that it's better to wait for a better offer instead of making bad decision. In Germany, we have opened yesterday the first store that is located on the street in Leipzig. But I would like to mention our Stuttgart store, 4,000 square meters. And if any of you had the chance to read an interview with our president, then, previously it was like 80 square meter, and we have 3-level store now, 4,000 square meters. So this is our flagship store on the German market. By the end of this year, we should have 12 stores in Germany. Well, comparing to the past year, well, this is a very good result for us. Middle East, we've mentioned that already, and we keep on mentioning it during our meetings with you. In September, we will have another store opened, a reserved store, and we will add another country to our map, which is the Saudi Arabia. We are actually close to new opening, which will be in the United Emirates, but it will be next year. And we have 6 years to reach the number of 30 stores. It will be a chain of stores. We are often asked by journalists, clients, or media, so what is the collection that you offer on that market? Well, the collection is just the same as the collection offered on other markets, except those models that may not fit to the conditions, weather or cultural conditions. So some models may not be shipped there due to the differences, as I said. However, we have a good cooperation with our franchisor, so we are recommended which models should be sent to our stores. So this is a very short comment from me, and the plans, well, this is Przemysław who will take over from here. So plans, so the thing that you are the most interested in, well, the results for the second quarter, this is the past. Now let's move on to the future. The floor space growth, 17% in this year. So by the end of this year, we should have this 844,000 square meters. 41% growth in the EU. Poland is growing about 13%, and Russia and Ukraine only 6% growth. And of course, we have this new region, which is the franchise in the Middle East, 5.5 thousand meter at the end of the year. Well, it's a pity that this one store will be opened in 2016. In January, it was supposed to open by the end of this year, but we will have to wait till January 2016. In terms of CapEx, 390 million zloty. This is the amount that we are planning to spend in terms of CapEx this year. Of course, fit-outs, this is the factor that is very important for us, but when we are talking about new space, we also always talk about fit-outs. So this is how we are supported by the owners of the shopping centers, Russia and Ukraine. What's the situation there? So we withheld the development, and we said that we would not do anything by September. But I can say now that we have decided that 4 stores in one in one shopping center. This is a new shopping center in Lviv, in Ukraine. So this is what we decided to do, open 4 stores in this shopping center. And Russia, again, 4 stores more, because it may sound strange in terms of Russia. We will be able to open 4 new stores in the shopping center in Moscow by the end of this year instead of next year, so it will be quicker. How about the next year? What are our plans? Plans are 15% of growth in the floor space. This is our plan and goal. And at the same time, we are talking about new countries, which is Belarus and Kazakhstan. Belarus and Kazakhstan will be opened in cooperation with our franchising partner. It will be a different partner than the partner that we are collaborating with the Middle East. Due to a risk, geopolitical and macro or currency risk, we want to enter those countries under the franchise model. In terms of our financial targets for 2015, where the sale should go beyond 5 billion zloty, so it's 10% year-on-year growth. The margin, gross profit margin, will be 4 to 6 percentage points lower. And the cost that we keep on a very low level, as long as we don't really see this pickup in sales, then we will continue to have low costs. So the cost should be 10% lower year-on-year this year. So what else, what risks do we see on the second half? So less commodities, but we buy it with the more expensive US dollar. So there will be still some erosion of margins, but not as big as during the first 6 months. So we also could see already the dynamics of this drop that is smaller now. So we hope that the margins will be better within the next 6 months. So how about this currency situation? Well, I would say that we will be able to do more in 2016, but we are trying to do as much as we can do. So let's remember about the risks. So the situation in Ukraine, which is shaky a little bit. So what will happen to the US dollar? And it is said that it will be strong. And the Polish market. Polish market is important because we generate 60% of our results there. Well, Polish market will contribute to the total result. Well, 50% of our yearly profit is generated in the 4th quarter. So, as usual, the 4th quarter will decide on the total result. And the plans. Germany, our direction #1. As of yesterday, we have 8 stores. Total floor space is more than 15,000 square meters, and our target is 30 stores within 3 years. Middle East, new stores, new countries. According to the contract that we have signed, we should continue to have new stores and new countries reserved in terms of brands, but we also signed a contract for MOHITO and SiNSAY brands to cover the Middle East. And as of 2016, we should have new stores there as well in the Middle East. And new brand that we continue working on. First stores will be opened in the 1st quarter of 2016. We are ordering the collection. We have the concept of the stores. We know how the stores will look like. And this is all consistent with the plan. And as we have said, our target is about 30 stores in Poland. This is how we expect the potential of the best shopping centers. Ladies and gentlemen, we would like to invite you for our Investors' Day. It will be on the 15th of October 2015, and we would like to welcome you in Gdańsk. We will show you our new logistics centers and our e-commerce departments, and you will be also able to see our new headquarters. And this is what we would like to show you because it has been recently renovated. And we also have a surprise for you, but those of you who decide to visit us, you will see what we have prepared. On our website, you will see our new equity story. This is a new story, more information. So I encourage you to take a look at the presentation. So that's all in terms of the presentation. And now I would like to welcome all the questions. But you have to remember that we are broadcasting online, so we have 2 microphones here. So if anyone wants to ask the question, well, my colleague will approach you with the microphone, then you will be able to present yourself, introduce yourself, and ask the question. Marcin Starokow, brokerage house. I'm asking about the capex, this 390 million zloty, and these are the stores. How about the logistics center? Did you spend all the money that you needed to spend on the logistics center? And how will be the capex within the whole year? The 390 million zloty it's the total capex. This is mainly new stores, but also about 25 million zloty is dedicated to the lifting and the so-called lifting of the old stores. So the capex for logistics center is closed. So this is the end of the story. And the second question concerns the margins. You said that the margins may be lower. Well, it's consistent with the consensus. And my question is, what do you think about the yuan, the Chinese currency devaluation? Does it influence your situation with your Chinese partners because you purchase in dollars and this drop devaluation of yuan, well, does it influence your situation? Well, you are quite aware of the very new developments in the financial situation. Well, it happened in the 11th of August, and what will happen? Well, we were wondering whether we are able to negotiate better purchasing conditions in connection with this devaluation of the yuan, and we asked our trading partner in China whether it's possible, and he said that yes, because it seems that the yuan will be cheaper and it's possible to negotiate better purchasing prices. But you can't ask me how much, and because it depends on the scale, and this is a very new situation, new development, and we can't really give you some hard data. At the moment, this is 3.5% US dollar versus yuan, so this is not really much, but it may positively contribute your situation. Well, then, thank you. Sylwia Jaśkiewicz, Bosch brokerage house. I would like to ask about the August sale and what are your plans in terms of the drop of LFLs, and will it translate to the cost situation? Well, sale in August. Well, we will know the situation in August once it ends. Well, I can say that the first half of August, the situation was not really good. In Poland, LFLs were negative. The rest of the countries, they were positive. So our feelings about August is a bit mixed. But we have to remember that only the second half of August, which is the back-to-school period, this is what generates really good sales. And in Russia, this is probably the best part of the year in terms of sales. So we need to still wait a little bit for the summary information about August. And in terms of the question, what do we plan to do as a company to revert those negative tendencies in terms of negative LFLs? Well, we are working on our models. We want to increase the number of models that are available in the store. It will be higher by 25% in the second half of this year. But as of 2016, the number of models in the reserved stores will be higher by 50%. So the better, improved offer and more varied in terms of prices, well, they should encourage our customers to visit the stores. And as my colleague said, we will also have new campaigns in these young brands in Cropp in-house. We have this new kind of approach towards our customers. We also believe that it will translate to a better traffic in our stores. Thank you. Michał Kuzewiński, JP Morgan. My question concerns the cost control, the scale, this dynamics of drop of cost per square meter. Can you continue that until the end of the year? And are you planning any cost savings in 2016? And my second question concerns the margins, the gross profit margin. Would you be able to tell us about the speed for those margins to pick up in the coming months and the situation in 2016, and how much you can influence the situation and how much it depends on the situation in terms of the US dollar? So starting with the first question, the cost. Can they be lower? I think that not. I think that we have hit the bottom of the cost situation. Well, it depends also on the sale. So we hope that the sale will be improved and therefore the cost may grow. If we could cut cost further, well, if we could, we would do it. But we have to remember that our company is never growing bigger only because the company cuts costs. So we need to invest also. So it is possible that the cost will grow a little bit, but you need to be safe because we will still be controlling our cost. And they shouldn't be really growing significantly unless, and of course, they will be the growth will be connected with the growing sales. And now the margins, our plans for the second half of the year. And looking by the AW collection, which is autumn, winter, well, it is said that the margin will be lower by 3 to 4 percentage points only due to the exchange rates. So we have to remember about it. In terms of the next season, 2016, well, remembering about the low basis from this first and the second quarter of this year, well, it seems that in the worst case scenario, the margins should be flat. But what we are planning to do and our operations, our efforts should improve the margins. So thank you. So in terms of guidance margins, basing on what happened in the first half of the year. So you expect that the second half of the year, it will be 3 to 4 percentage points of drops. Yes, 3 to 4 percentage points, which is a result of this situation with US dollar and on this new collection. We will see what is the demand, but, well, the guidance is 3 to 4 percentage points. Well, concerning the first question concerning this ruble and hryvnia process of keeping in Ukraine and Russia. Is it completed? Yes, 95% of all contracts have been negotiated. It was capped, so it was frozen on a specific level. It was both in Russia and Ukraine. It was quite an effort, but it's behind us already. Now we will actually focus on new contracts. Of course, in the situation where we deal with foreign currencies, if anything happened, we will go back to the shopping centers and we will discuss our rental charges. And the last question about the estimated influence on the tax concerning the transaction with the Cyprus company. So what can be the average tax rate next year? Well, it will not influence the effective tax rate this year. This merger will happen in the next year. By the end of the year, well, then we will have also assets. The asset will be amortized for the next 20 years, and the influence on our P&L. So our P&L will see it in the fourth quarter and not in the next years. But in the next years, in the future years, we'll consume this asset. So the tax that will be paid in the future years will be lower. We expect them to be lower by 30-40 million year on year. And what's the influence on the fourth quarter? So what's the amount? It depends on when it happens. Our lawyers work on this merger, but taking into consideration what we know about the transaction, so all brands, trademarks are worth more than 4 billion zloty, so 19%. This is the scale of the asset. So this is huge scale in terms of results. Yes, this is quite a considerable scale. It has been shown in last year's results. It was shown, presented in the fourth quarter of last year. Thank you. Well, I can see that there are no more questions, unless there are some questions, online questions. Are there any online questions? Can Russia contribute to our result, and will it influence the sales or EBIT? Concerning Russia, we have really good results, record-setting results for this quarter, and this EBIT. Russia EBIT is more than 50 million zloty. So this is the contribution that happened in the first half of the year. If nothing bad happens in the second half of the year, then we can expect that it will be at least 50 million zloty. So this contribution is mainly due to the very low cost. So the revenues calculated into Polish zloty, but these are the Russian costs that help us to achieve really good financial results this year. One more question. Your rental charges dropped by 13%, whereby the floor space grew by 16%. Is it possible to repeat that lowering cost? So do you also report in your cost rental charges the changeable elements? So rental charges are divided into few elements. We have the fixed rental and the rental that depends on the turnover. But with our new rental contracts, we preferred this variable rate. So our rent depends on our turnover. So on the one hand, we are willing to share our success with the owner of the shopping center. But on the other hand, when the traffic is lower and the sale is lower, well, we would like to have lower cost. The question was whether this can be maintained in a longer perspective. Well, we also had a lot of operations connected with new negotiations concerning the rental charges. It was mainly Russia and Ukraine, but also Poland. But we can't really expect the cost to drop further. But the fact that we are opening new stores, well, our cost per unit is lower, and the new stores are opened according to better conditions. So in a longer time perspective, the cost should be on a very good level, lower level. But I can't really tell you whether they are able to drop further. I think that the levels that we've reached now are quite good, quite optimum, but we will work on improving them as well. Well, thank you so much. Thank you for the conference. Thank you for your attention. And I would like to now invite you to a small break. Thank you, all of you. Thank you, our online users. Thank you.